Today we are giving you those updated monthly expected moves for the SPY and the Qs. If you want the rest of those monthly expected moves, those are down in the description. You can find those over on Patreon. It'll cost you about a cup of coffee a month to get those ranges, and they are very, very helpful because you might find trade setups like we did, like this one right here. Now, today I really wanted to talk about the SPY, and we're going to get into that first off as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta, looking into AMC and GME, seeing some green over there. But the key thing here is this move here at the end of the day is most likely not going to last unless a key thing happens. And we're going to talk about that first off in this video. Make sure to give a like and subscribe if you're looking for some technical analysis content, and we will be live tomorrow morning. So let's get into it. First off, let's give you those monthly expected moves. Okay, let's get those monthly expected moves, and then we can talk about that signal that you need to see. And this right here is going to be your upside, 593.83 to the upside. We do have a 553.69 to the downside. So about a 4% move, 4 or so percent move in each direction for the expected move for the month of October. Very crazy. We're already to October. It's almost spooky season out here. So what we want to pay attention to are we going to actually head higher? The thing is, with this, we would like to see a pullback early on in the month so that can rotate back up. But as of right now, we aren't necessarily seeing that. So we're going to talk about the signal you need to head higher. As for tomorrow, you do have 576.99 for your daily expected move to the upside and 570.73 to the downside for your daily expected move. So not a lot priced in, and we might get some updates as far as the port workers strike coming out tomorrow. So we'll find out what's happening with that. But the main signal that we really need to pay attention to if we're going to head up to this weekly expected move with this solid bar here is the 2 hour. That 2 hour does have to turn back up. It really, really does. Now, the signal that we talked about before today was on the hourly chart, so we have to pay attention to it. If we're going to head to a higher level, that's perfectly fine. But does this just make another point of divergence, right? We're testing that level one more time. If you can't break through this time, you might see that thing fade down. So be looking for this, see if that hourly is able to pop up, hit that daily expected move, and then curl back down. That could mean a lot because that would be right next to negative territory. That's right. We pay attention to not only just is the MACD curling up, is it curling down? We pay attention to where that MACD is curling up and curling down, right? We talk about those in the course extensively. Those are all 90% off in the description, but the main thing here is going to be we made our signal with this hourly chart. The 30-minute is turning up. Is the hourly going to be able to follow as that crosses up towards the end of the day? That's going to be the key thing for the SPY to overall, one, get bullish. I would say if the 2 hour can cross up, right, that would be overall the bullish take there. The 2 hour crosses up, maybe we just gap higher, we see this thing go a little bit nuts, but you'd still want to say, is that really going to last as we're seeing completely overbought readings on that 2 hour? Then to the downside, I'd really be paying attention to if this rejects, turns down in some way on this hourly chart, even a 30-minute chart, right? We see that 30-minute curl up. If that can curl back down into negative territory, that's really what we're looking for. And it's great to have these expected moves. This is a 68% zone in here for tomorrow. So we can pay attention if we get outside of that early on in the day. We see a lot of people jump to the call side, and we know that dollar is bottoming out. So we can pay attention to that towards the end of this video. But if this all takes place and curls back down, well, this might be one last fake out before things get a little bit ugly. So it's a time to be still a little bit cautious, but we want to make sure to be paying attention to both signals. Hourly crosses down, bad. 2 hour crosses up, hey, you could see something crazy. Is that really going to last long? I would say if that does happen, we need some kind of consolidation or pullback at that point. So it would tell me, hey, maybe I want to take profit a little bit earlier. The monthly expected moves for the Qs is going to be 513.03 to the upside and 463.11 to the downside. So it's now giving us numbers above 500 here. That's a pretty decent sign that we could see, us get to something like 500, especially since that weekly move is there. And then the daily expected moves for tomorrow are going to be 492.04. Very hard to see there, but 484.10 to the downside as well. These are our 68% zones. This is your 68% zone for the month of October. October. Okay, so what we want to be paying attention to here is, once again, it's going to be that 2-hour chart. If that 2-hour chart can rip to the upside, maybe we see something crazy, able to consolidate or pull back in some way and then continue this positive trend to an upside move. That would be interesting for the month of October with this kind of setup, because you've really just barely pulled back here and then you cross back up. Hey, that does mean positive things because you are in positive territory down there on your MACD. So pay attention to it. Now, something key to understand about tomorrow is we're going to go into a shorter time frame on the 30-minute. You're noticing we see a green blip at the end of the day. So going into tomorrow, positivity is the most likely option, unless we get a little bit of news from the port strike, right? We want to pay attention to that. That can affect the economy. Very big impact on the economy there if that does happen, if it takes place. Because things could get more expensive. Things will be struggling to get imported, and someone pointed out Walmart. We'll bring that up live tomorrow. But for now, I just wanted you to pay attention to that daily expected move and how it is up towards 492.28. Now, this thick red line is thick and red because it means watch out if you get above it. Watch out if you get above it, because that is your annual expected move. That is the expected move for all of 2024, the upside. You notice the last time we got outside of it, sell off. We get outside of it way over here, what happens? Sell off. Okay, so this is going to be a key area up here to pay attention if sellers want to step back in. How that would look in your charts is 30-minute cross up. That's great. That is bullish. This means the most likely thing is we are going to go up towards that 492.04, 492.28 level. But if that does go do that early on in the day and we reject, that is just going to set up another little point of divergence, another point that is very close to negative territory. We could see that thing curl back down. So this is going to be something key to pay attention to for the Qs tomorrow. And then your bullish case is going to be, hey, if that 2-hour is able to actually cross up, you might see some crazy positivity, maybe some kind of squeeze or something like that. But for the most part, this move to me looks like if we do move higher from here in some way over the next couple of days, it most likely will not last very long. I really think that it is due for some kind of bigger pullback at that point. Apple early on in the day did something good. It really did. It saw that move up, that cross up on the 2-hour, and right now closing at the high of the day, about to break through. Everything looks jolly. It's Christmas morning and Apple is saying, hey, this cup and handle is going to play out. Until you pay attention to both sides. That's why we pay attention to both sides, is because we already see how something is forming here. It's overbought. This pullback was fantastic, but you would expect us to get more of a handle here to actually head higher again, right? Kind of a cup and handle within a cup and handle. This did cross up, but it's creating the possibility of divergence here on the MACD, on the RSI at the same time, which actually tells me I got to be a little bit cautious if this 2-hour does rotate down. As I go into the shorter time frames, you're going to see that the 30-minute is just getting cooked and cooked. So is this going to be a strong move forward? It can. You can see crazy stuff even in this overbought territory. That's where crazy stuff does happen. But is this really going to last? Closing at the very high of the day, you would expect that to continue. Right now, the 30-minute is positive. And what we were looking for more so in here was, if we're going to go up to that area, you need that to pull back to the center line. So what I'm looking for from Apple, actually, I think for it to remain healthy and for this all to play out over here, this whole cup and handle situation, I really still think it needs to pull back on that 30-minute. Pull back, fill a gap, and then turn back up. This is great. We left a gap behind. You would have some great structure in order to head higher. And we'd have a very clear trade setup, which would just be a simple 30-minute crossing up on a MACD down there into positive territory. So something that I really want to pay attention to, though, is if this drawdown, if we're going to get one, that is, because right now it's pointing to the upside. So we're just talking about things to set up a possible trade. If this drawdown on the 30-minute is too much, we start to go down into these areas, you might be already crossing over the 2-hour. So right now, the 2-hour, I believe, is your signal for one, positivity as of right now, but you have to make sure to pay attention to how that can really hurt you. And how that can really hurt you is if this 2-hour is able to cross down. Right now, if it experienced a 30-minute pullback, I think that would be fantastic, and then curl up into positive territory, and it would look great on these charts. But we're not getting that. We're trying to break to the upside, I think, too quick. Good thing we have a weekly expected move. We've seen crazy stuff before, but for the most part, you would just say, Apple is not looking like the best in the world opportunity. The last time it looked like a decent opportunity was when it hit our buy zone, and that was the opportunity there, and we've headed up ever since. a consolidation at this level would make more sense at this point for Apple. So Apple overall is going to be a difficult one, I think, for a trade setup at the moment, but it is one that I think could develop a trade setup over the next 48 hours. Tesla really wanting to hit these high levels, right? When we see the big divergence all the way down, we see the divergence, well, kind of flat, a little bit up here, and then all the way down ever since. So since this point right here, you've had the divergence at the same time on the RSI and MACD at the same exact time, which tells me, what do I need to pay attention to? Well, if that 30-minute curls up, we can make a higher move. Good thing I have a weekly range up here, so I know how high up the options market is expecting. You can get that in the description down in the Patreon link below, right? Those are great to have. It is a tool that not a lot of people use. But the 2-hour has crossed down and it already had a rejection. Now, the most likely thing for the 2-hour with that rejection is to get a nice pullback that then curls up into positive territory, because we are so positive on this MACD. But now you're just noticing we have flatness, if not down, on this 2-hour for the RSI, and that's telling me, hey, this is something that says do not chase, right? This is a great move for Tesla. It took even me off guard, right? I was paying attention to if it would roll over in these areas. It didn't do that. It rolled right back up, managed the trade, right? So managing trades can really help you out, but for the most part for Tesla, it still looks like, to me, a 2-hour bigger pullback is the overall answer. And when you get the monthly expected moves, because you're trying to get better at trading and you want a tool to really help you out, those monthly expected moves on Patreon can help you, because Tesla has a major amount of implied volatility for the month of October, and that is something you want to pay close attention to. As of right now, I don't think the signals look fantastic as far as it goes for the time being, but a 2-hour pullback is the most likely scenario here to go down and dip and find those buyers and then curl up. That could be the opportunity to the upside coming later. When is that going to happen? Well, I believe it's when this 30-minute actually is able to go negative here. Notice we keep curling down, but we pop up. We curl down, we pop up. So maybe we pop up one more time, curl down right as everyone gets faked out at this high, and then we end up going into a negative trend for a week or so. Amazon is one that we're watching closely, actually on the daily scale, right? We're watching this on the daily scale because it is just about to curl over, and that is not a good sign. Now, you're getting a test of the 20 at this moment. So once that does happen, you want to look at those shorter time frames and see what they look like. As of right now, the MACD is extremely low, which tells me, okay, we saw the divergence up in these areas. We saw this right here, and we go, okay, this is going to head down on that 2-hour. But for now, you have curled up on a 30-minute, meaning you're consolidating or getting some kind of bounce. Well, you're still way deep into negative territory. So even if that did want to bounce up a little bit higher and then curl back down, the most likely scenario there is to continue the trend, to take out this low and go make a new one. So still a little bit worried for something like Amazon, still paying attention to if that daily time frame is going to roll over. But right now, the most likely thing is to consolidate and then head down, is to bounce and then head lower, and then we'll pay attention if any kind of divergence is showing up at those lows. Now, Nvidia was one that actually did show some 2-hour divergence. Did that daily cross over? Well, the daily hasn't crossed over yet, so that isn't saying dramatic downside just yet. It's actually rejecting, turning back the other way after testing that 20-day moving average. So if we're gonna use the 2-hour for some kind of trade to the downside, then if that 2-hour turns up, there is no reason to take downside anymore, right? So this is gonna be the main signal. If you wanna get a little tighter with it, I understand. The hourly chart is gonna be your friend here. Maybe you're right that this needs to fall down, but the hourly turns up one more time and we get some kind of, I would say, triple divergence at this level, or some kind of divergence in the nearest price action. I think that that would make a lot of sense. Right now, you do not have that curled up on that MACD yet, though. So still, the most likely thing is, hey, we're going to keep consolidating until we get that MACD to curl up and confirm that momentum. We can't say it's going to test this high, go make a new one. Once that happens, if it happens early on in the morning, then we would say, hey, it might be heading up towards a weekly expected move, so watch out and pay attention for Nvidia. Now, once that does happen, you just want to go back over to your daily charts, see if that thing is curling down on daily charts, because that curls down on a daily chart here, it's not going to be very pretty, right? If we don't hold up in these type of areas, or maybe we break out and we curl right back down with some kind of fake out, then that's going to be a little bit troublesome, especially if you get the fake out to the upside. A lot of that time that leads to a bigger break to the downside. So these are some key things to pay attention to for Nvidia. The 2-hour signal is the main thing to watch here. If that 2-hour does turn up, then there is no reason to take a negative play here. But if that's not able to turn up and we start to reject on some shorter shorter time frames, that's when we'll be paying attention for more downside and seeing if that daily chart can roll down. AMD getting the breakout moment, and we were overall saying that from this level, judging the MACD positioning here, the most likely thing to happen here is a pullback because you do not have divergence. If you see my dotted line, that blue line goes above it, you don't have it there. Actually, it's a little bit better than that. And then on the RSI, you don't have it either, right? It comes above my dotted line here. So that tells me that a pullback is the most likely scenario and the trend is most likely to continue here. So what we're paying attention to is some kind of retest of, I would say, 160.83 or a retest of the broken out triangle, and then see if that can just curl up into positive territory. On this channel, I like to talk about a little into the future so that you can be prepared for some kind of trade setup. This would be the bullish trade setup anytime this 2-hour is able to fully curl back up. Now, something that could be a little bit rough is if Nvidia does see weakness and we do see that 2-hour dip down a little too far, you can cross down on this MACD right here. The problem with crossing down on that MACD right here is because you're trying to build back above the 200. You've really spaced out these Bollinger Bands. So if this daily is able to curl down, you might end up down towards 131.80 pretty damn quick back in this zone. So that is something I would really be paying attention to. I still think that the main move for AMD is patience until I'm able to see some kind of actual further pullback or curl up on that 2-hour. I'm just going to check over on the 30-minute. I actually did not look at this before starting. And one cool thing about the 30-minute at this top here is this, and this is something very, very cool. Rejection divergence is difficult, but sometimes you get a little lucky and you see a little blip and then you see, oh, that's a double top. So this looks like a double top to me, pulls down, 2-hour cross. That looked fantastic. Now you got to see, is that 30-minute going to rotate up? If that 30-minute rotates up, it doesn't mean the 2-hour has to cross as well. It just means that 30-minute can rotate up. Is it going to curl back down? That's the main thing I think that's one of the main things you should be paying attention to with AMD. If that does curl up into positive territory, that does mean a positive move can come. But what if you quickly set up some kind of divergence towards 169.58? These are just some ideas, and we'll maybe look at this tomorrow while we look at AMD live tomorrow morning. Make sure you're subscribed and you like the video if you're enjoying this content. But we're going to watch this tomorrow because I think with just another day's worth of price action, we can tell a lot what's going on using this 30-minute chart. Meta is, I would say, struggling a little bit on this 30-minute because you're crossed down. This is a bad sign. I know we're trying to curl up right now. We've really consolidated almost like a little cup and handle, but you have such weakness and momentum here that one little piece of bad news might send you into a bigger pullback, maybe down towards something like 550, towards this gap fill area. So this is something I'm paying attention to here, seeing if this can actually go negative. This is a bad sign for Meta. Even still, you do not have the confirmation of momentum to the upside just yet. Maybe we just need a little bit more price action and that is going to curl up into positive territory, right? So if this does curl up into positive territory right here, there is no reason for a downside play until that crosses back down. That's very key to understand. As we open up a 2-hour, this is going to be your overall bullish signal, I think, for Meta. Now, you've been squeezing for quite some time, so I think you still have the opportunity for that 2-hour to get down by that center line before it's actually able to curl up, which would mean we actually do need to experience some kind of downward consolidation in order to head up later on. So that's something I'm paying attention to with Meta. Looks like a 2-hour is still saying we should be pulling back, but we keep squeezing higher. So I just think these moves are a little overzealous to the upside. And if we continue to head higher, say over the next couple of days, then I don't think it lasts much longer than that. Real quick for AMC and GME. The key thing for AMC, it's seeing great moves, but it keeps getting rejected. They do not want this thing to close back above the 200. You close back above that 200, you close above the 9 and the 20, you get through the 50, well then 504 is looking really, really close. And you started to take back the 200 and it gets fought against, right? We saw some orders in there for about 170K shares to the short side there, around 550 or 454. So this is something key to pay attention to. The main signal though you want to watch is the daily signal. The daily needs to turn up in order to see a very big positive move. And if you want to see a very, very big positive move, you got to get through 504 this week. This line does change every single week, so we will update this line every single Sunday. This is the updated line. You got to get through 504. For GameStop, you're already curled up on the daily chart. You're trying to reach up towards that 2480. 2480 is the level to see something crazy. The best part about GameStop is you're seeing some great divergences down here on the MACD and the RSI at the same time between these lows. So you do have divergence around these areas, and that is something very, very cool to see. So we want to look into the shorter time frames to see if we can break through 2480. We update this level every Sunday as well, so make sure you are subscribed. The key thing is going to be, I like 2-hour momentum, and we have it as of now. We have 2-hour momentum as of now. The only problem is I'm seeing a little divergence here. So if we experience weakness tomorrow, then the most likely thing is to actually head in the downward direction. That's just how it goes. Right now, if it can remain positive, you got a shot to go through 2480. But if that just rolls down early on, that's going to be a bad sign. If you want to get a little closer into it, I would say the hourly chart is going to be your friend here. This is a good sign to break through that 2480, but you can see how quickly, if that just rotates down, you do have some steep divergence here on the hourly, and you could easily go test these levels again or even break through them. That's why we have the other side to this move on the Patreon in the description. One thing I was paying attention to with volatility was the 30-minute chart this morning. I really was looking at the 30-minute chart, watching to see if that was going to cross down, and then right when that crosses down, I go, okay, most likely volatility has a pullback, which means the SPY by the end of the day most likely does end up a little bit higher. Now, the key thing to watch here is when that 30-minute turns back up. Now, something as simple as a 30-minute turning up can go a long way, because all you need is like a couple of days of volatility, and this daily scale is turning up after that reaction down to the 200. So the main signal, right, 30-minute crossing up, you can pay attention to that in the shorter time frames, and that's going to give you that chance to curl up into positive territory on the daily scale. But for the most part, you want that daily scale to tell you that's coming in. The last time that did come in, we saw big spike in volatility. Last time that did come in, well, it happened pretty much at the same time, and boom, big spike in volatility. So if you want that big spike in volatility, or you're paying attention to that big spike in volatility, this is going to be key. Can we actually cross up on this daily chart? And if you want a chance of that happening, say tomorrow, then you need that 30-minute to confirm some upside on that shorter time frame. Let's pop over to the dollar just real quick, just to check this out. Notice this, the dollar is seeing some green here. We are seeing some selling behind the curtain. The SPY is green, the dollar is green, and actually that PCC, I know it says 0.925 up there, but we're going to watch this in the morning because it was below that. It was at 0.89, and it's been low for a few days now. So the reason that we were paying attention to this was because of a couple of things. Well, we saw the 4-hour divergence. We noticed that daily was struggling to cross, and we go look, and we go, oh, look at that. There's 4-hour triple divergence across this thing, and it's starting to spike up. That actually did cross. So how we played it overall today was pay attention to the 2-hour. If that crosses, the next thing you want to watch is the 4-hour. If the 4-hour crosses, it means that there could be a higher probability of people flying into cash, or cash going up in some way over the next few days. And the reason for that, maybe it's the port strike, maybe it's something else, but for the most part, we just want to say, why are people running to cash and running out of assets? And that's going to be a big deal when it hits the actual tape. So I guess the main takeaway here is we have new monthly moves, and that is fantastic to get on all of your charts, especially if you're trading one of the stocks that we do cover. If you enjoy trading some of the stocks that we cover, please get that Patreon, because it will really help you out with these monthly expected moves. If you're not wanting to get that, well, we teach you how to make your own expected moves in the Using Technical Indicators course down in the description. It is currently 90% off, but really want to talk about the fact that if this 2-hour does confirm up, you notice how overbought this is. Like, I really just want to point this out again in the last part of this video, saying, hey, the 2-hour is still right by overbought territory. So even if this does pop up like this, it's really asking for some kind of bigger pullback to come, because we are just gradually heading higher in this overall move. So it's a time to still be a little bit cautious. I know we talk about cautiousness a lot, but that's just because this market is a little bit tricky for 2024. And I think that it's fantastic that people want to learn. Because it's tricky, people are dedicating themselves to learning. I think that's fantastic. So overall, I just hope you guys have a fantastic evening. I look forward to streaming with you guys tomorrow morning and seeing what this market has in store for us. We have a little bit of a small range for the SPY for tomorrow for those daily expected moves. So sometimes when you have a smaller range, you actually end up seeing something crazy, because today we actually had a big range and we kind of just dudded out until the end of the day. All right, guys, I'm gonna go eat myself some chili. Thanks for joining me today. Really appreciate it. Thanks for liking, subscribing. You guys are fantastic, and I will see you guys tomorrow. Peace.